Net Wealth Investments Limited is licensed to provide general advice. Our podcasts are not tailored to any one financial situation and may contain views of our presenters which may not align with Net Wealth's. The guests' organisation and Net Wealth have an arrangement for their financial products to be available for investment through the Net Wealth platforms, and Net Wealth may receive fees from the guest. More information about Net Wealth can be found on our website, including our financial services guide and disclosure documents. Please seek professional advice before acting.
Hi, I'm Matt Heiner, Joint Managing Director of Net Wealth, and welcome to Between Meetings. In this podcast series, I chat to industry professionals and thought leaders on what made their career successful and the opportunities and challenges they see on a wide range of topics as they relate to the delivery of advice and financial services. I hope you enjoy their unique insights. Hi, and welcome to this episode of Between Meetings. Today I'm delighted to have Martin Franc with us. Welcome, Marty.
Thanks, Matt. Great to be here.
We were just saying this is actually the inaugural podcast from our new podcasting room, so it really is a pleasure to be here, and also the first one I've done in person, I think, for close to 2 years.
Yeah, right, and it's a great fit out. I've got to say, I'm very impressed by the office here. Yeah.
Thanks very much. It's been a labour of love for a couple of years, and anyone listening, if you're in Melbourne, please always feel free to drop in and say hi. Now, Marty, before we get started, I thought it'd be really helpful for our listeners if you could just tell us a little bit of your background, your career, and the question I always like is, why did you get into this industry?
Yeah, that's a really interesting one, Matt. So I've been in the industry 27 years now, 94. Started with Bankers Trust up in Sydney. Got into the industry, it was actually just fortunate. I was, at ANU, majoring in political science, thought I wanted to have a career in the public service in foreign affairs, and quickly realised that wasn't a path that I wanted to take, and had a couple of friends ahead of me at uni that went into funds management with the introduction of the superannuation guarantee, and told me what a great industry it was. Legislated growth, can't get better, and started out as a dealer at Bankers Trust on the trading desk, and actually fell into sales. It was quite accidental in many ways. It was when Nick Leeson brought down Bearings there in the mid-90s, and all of the big institutions were then worried about how derivatives were being managed in their portfolios, and the head of sales needed someone from the trading desk to go around and help explain to clients how we were trading derivatives as an organisation. That was my introduction to sales, and haven't looked back. And thankfully my career's developed, and now here I am in the seat as the CEO of Invesco.
That's a great story, and I was just thinking, as you said that, often trying to explain something like derivatives to a retail customer could be very challenging. Do you remember what your sales pitch was?
It was more built around the separation of duty. I think it was less about explaining the actual mechanics of derivatives. It was giving clients comfort that there was a separation between the portfolio management, the settlement, and the trading function. But you're right. I mean, when clients were asking about what derivatives actually were, that took some. It was an interesting experience in taking jargon out of the explanation of financial instruments. Yeah,
that's interesting. And I guess thinking back through your career, you've only been to a couple of institutions, which is not all that common in this industry. What was it that was so special about the first couple of roles that made you stay for so long?
Look, I think the one thing was it was such a dynamic industry, because it's so tied into the market dynamics. And as we all know, markets change day to day, week to week. So the thing that was exciting for me was just how dynamic the industry was, and just the evolution of the industry, which we've seen a lot transpire over the last 20 years, some good, some bad. But I think it's fair to say that what's kept me attracted to this industry is just there's never a dull moment. It is truly, I think, a dynamic industry, an innovative industry, and a creative industry. Yeah.
And that's a very good point you make. Change is a constant, and change is always going to be a constant in this industry. When you're thinking about some of the roles that you've had and navigating teams through the constant change, what are some of the lessons that you learned, or some of the things that you put in place to make that easier for staff? Because it can be very, very disconcerting, and a lot of change. Some people deal well with change, some people don't.
Yeah, that's a great question. I think when you break it down, it's an industry that rewards innovation. It rewards risk, and it rewards creativity. And so I think within that, you need to create comfort around that risk taking. And I think as my career's developed and grown, I think the three key aspects that I reflect on constantly. One is around being humble and sharing success. The second one is about being empathetic. If you're going to be a risk-taking entity, which we are, you need to be empathetic and no scapegoats. Absorb failure as a leader, and that's effectively creating that psychological safety that fosters greater interpersonal risk-taking. And then the final bit is curiosity. I think this industry rewards, as I said, curiosity, creativity, and innovation.
Risk-taking and financial services are not normally two words that go together. Putting the management piece to a side, how do you actually manage risk-taking, or how do you define risk-taking in what is a very heavily regulated industry, and make sure that the team is actually going for the ride, but also the risk department and the board?
Yeah, and look, that's obviously, Matt, with the way regulation has evolved over the years. I think the way that I reflect on risk, and risk it's got different dynamics. There's the investment risk, and then there's the corporate risk, and then there's the regulatory risk. It's ensuring that you minimise and mitigate unintended consequences around risk-taking, so that risk is intentional risk rather than idiosyncratic risk, if I can put it that way, that can create the unintended consequences. So it's being, like I say, on multiple levels, really understanding the risk you're taking as a corporate, and then within the corporate on the investment side, that risk is intentional.
Which is very refreshing to hear, and it's almost a bit of a Silicon Valley growth mindset that you've brought to the industry. And tech companies often talk about failing fast, learning from your mistakes, but also never making a bet so big it's going to bring down the house, which is, I think, what you've just described far more eloquently.
Yeah, thanks, Matt. But I think it's, as I said, you've kind of got to live and breathe that. It's part of the culture now, which I think in investment management and advice, a lot of the culture is built around how you perceive risk and how you address it. Yeah.
One of the big risks that you took was moving down to Melbourne. You're a Sydney boy, lived there your whole life, and you've now been in Melbourne for 8.5 years. Clearly wasn't for the weather. What was it that attracted you to Invesco when you decided to move down?
Yeah, look, it was a challenge. I'd spent 15 years of my life at Bankers Trust on the investment management side, now Pendal Group. Great organisation. And I just reflected on, if I was going to make a change in my career, it was going to be one that was quite a dynamic change. And I felt that I was ready to take more of a kind of a strategic leadership role, and that came up with Invesco. Invesco was in an interesting position back in 2013. It was a business that was probably, in fairness, stuck in a bit of no man's land. It had low assets under management. It didn't have a great deal of diversity. So frankly, I saw the risk as asymmetric. There wasn't a lot of downside, but certainly there was a lot of potential. It's a very strong global brand, very strong asset management capabilities. And what really attracted me to the role, I think that there was frankly more upside than downside in being able to transform a business and really participate in the transformation of a business.
Can you just talk a little bit about Invesco when you joined? What was the product offering and who was the target market?
Yeah, it was very limited, Matt. We had about $1 billion in assets under management. It was predominantly around Aussie small caps. We had a small team based here in Melbourne. That was roughly about 800 million of the billion of assets that we had. But the business globally really saw Australia as an important market. Not surprisingly, the fourth largest or fifth largest investment management pool in the world, and they wanted to get it right and grow the business. And so, really, my remit was around the path that we were going to take to grow the business. And the great thing about Invesco was they're very patient with their capital. They're not a Wall Street firm, Atlanta headquartered, very different culture, which is very long-term focused. And I felt that was very aligned with what needed to happen with the business. And so, yeah, the path then, or the journey, was really one around growth and how we were going to grow. And the beauty was we could choose that growth because we were coming off such a low base. So it was that path to growth. But also the second aspect was de-risking the business. It was diversifying the capability set that we were going to bring to market, which I think we've done quite successfully.
And so in the 8.5 years that you've been there, what does the business look like today?
Yeah, so the business now is 37 billion in assets under management. So we've had a great, it's been a great journey. I shouldn't talk in the past tense. It still is a great journey. Managing across both active and passive now, across alternatives, public markets and real assets. So the business far more diversified. We've tripled revenues over the last 5 years. So it's really been a case where, you need your share of luck. But the old adage is, luck's where preparation meets opportunity. I think we've, really put ourselves, and the leadership team has played a great role alongside me in really understanding where we best position the business for growth. And like I said, we've been quite successful on that journey.
I'd say been very successful. That growth is phenomenal.
Yeah. No, it's, and, hopefully looking forward, and particularly the last 2 years, which, as Matt, for any leader hasn't been an easy time. I think we managed that work from home dynamic that was catalysed by this pandemic really well, in not allowing that to dislocate our path or our strategy.
One of the questions that I'm sure everyone's getting used to hearing is, what lessons have you learnt from the pandemic, and what are the things that you're hoping will outlast the period that we're going through?
Yeah, I think the most important thing I've taken out from the pandemic, and I think as an organisation, is really this mission that we have as an organisation, is that we exist to help people get more out of life by delivering a superior investment experience. And the key word in that is people. It's not just clients, but it's staff, it's shareholders. And I think when I reflect on our business over the last 2 years, I think the most important thing, again, that's really become sort of self-evident now, but the focus on talent. This is a human capital driven industry, and talent is very important in what is a very competitive industry and competitive market, but also the importance of client relationships and being present, albeit that's been virtual, but being present, being transparent, and being authentic in the engagement with client relationships. So I sort of look at what has really become more evident over the last couple of years is the importance of talent and the importance of our clients and the engagement therein.
And we're hearing a lot about that at the moment, the great resignation. I heard someone call it the great reshuffle the other day, which I think is probably a more appropriate term. Are there things that you're doing now to not only retain staff, but also to recruit staff as we go through this sort of next period?
Yeah, look, the big one around this is the return to new normal, Matt, which I think every leader is grappling with in some way, and how to attend to that. There is no doubt that the operating environment and operating models have now changed structurally. I think the roots of this pandemic have grown quite deep, and there's an expectation from your talent, your staff, that there is more flexibility now in the operating model. And look, I agree with that, but I think it needs to be measured. Again, this is a business that's all about relationships and contacts, and I think that interpersonal connection, both internally and externally, is really important and vital. So, we're working our way through what our new normal looks like. I think there's no doubt your phrase around the great resignation or the great rebalance, there will be an element of that. I don't think the new normal will necessarily satisfy everyone, and people will elect to choose different paths, maybe even different careers in different industries. That's probably a reality. But I think fundamentally, as a leader, I've got to sit back and balance that new normal environment with an expectation that we need to connect. And for me, reconnection's a massive theme for 2022. That's reconnecting with our stakeholders, reconnecting with our clients, and reconnecting with each other. I think that's when we work best. And that's not a it's not a slight on any lack of productivity through the work from home environment, but I think there's an efficiency that comes out through being together that creates more efficient productivity in my mind, and cultivates a stronger culture, which is very difficult to do virtually. So yeah, for me, the big theme next year is one around reconnection on multiple fronts.
It's definitely very difficult to create and maintain culture via Zoom or Teams. I think everyone agrees on that.
Yeah, totally.
Before we bring you the second part of this chat, a little bit about who we are. Celebrating over 20 years, NetWealth is an ASX-listed company that has been rated number 1 for overall user satisfaction by Investment Trends for 8 consecutive years in their Planner Technology Report. As the financial advice landscape changes, it's important to embrace new technology to enhance the way you run your business. With change comes your chance to innovate, explore new perspectives, and realise new efficiencies. NetWealth is here to support you on this journey by providing you market-leading technology, excellent customer support, and expertise to help your business thrive. Contact us today or visit the NetWealth website to learn more and get the PDS, which should be read before making a decision to purchase a NetWealth product. Products issued by NetWealth Investments Limited.
You've talked about connection a lot, and when you think about the connection that you have with your clients, it's continually morphing and changing quite significantly to how other fund managers are thinking about connection and the things that they do for their end customers or for advisors, particularly around the coaching and also the technology side. So I remember we met with Intelliflo when we were in the UK pre-pandemic in 2019, and Invesco had just bought a large stake, or maybe even 100% within Intelliflo. Can you just talk about how the company maybe locally and globally is thinking about technology, but also some of the other programs that you're rolling out and running?
Yeah, it's a great point, and it's a real area of focus for us globally, Matt, is this evolution into fintech. You know, historically we've been just a pure investment management firm. That's all we've done. No banking, no broking, no risk. It's just been pure investment management. But we've realised that the world is evolving, and as part of that evolving world, we feel as an investment manager it's important for us to try and get closer to our clients where it complements our existing stakeholders, financial advisors and institutions. And Intelliflo's really been our first step into fintech. It's a 100% owned subsidiary of Invesco. And I think about this from a global perspective, and then I'll bring it back to Australia, but I think this concept about getting closer to our clients is one that is kind of, really embedded in the organisation now, and how we do that in a way that, like I say, complements and doesn't demarcate our existing stakeholders and clients. But I think from an Australian perspective, and I think where Intelliflo can really forge a strong footprint down here, is that whole tech stack and the practice management side. I think it's been a fairly captive space. With Iris and Xplan, and for one, we could see an opportunity to compete here, and doing it in a way that doesn't conflict with our existing business. And so bringing practice management solutions or alternative practice management solutions to advisors in the way they think about their tech stack is, I think, a proposition we feel is a good opportunity in the Australian market. But another area that we've focused on and we've brought out over the last couple of years is Invesco Consulting. And this is a group with a pure focus on working with financial advisors to provide research and actionable insights around all aspects of the advice business. So new business development, wealth management, practice management, client service. And we feel that's a really good complement as well in giving back to the advice community around helping advisors think about tools to grow their business and engage with clients. So yeah, it's been a great last couple of years, Matt, in thinking also around what I'd call adjacent services outside of just pure investment management, thinking about those adjacent services complementing what we're already doing here rather than conflicting or competing with what we're doing down here.
It's a fascinating strategy, and just interested, when you first, the practice management I think makes sense, and fund managers and platforms have offered practice management in various forms for many, many years. How did the market react when you came through with the technology and the fintech angle? Because it's quite divorced from where you've come from.
Yeah, it's one, and we've kept it separately branded to ensure that there is this, and it's got a separate management team, separate entity. Look, I think the market has generally embraced the fintech opportunities we've brought out to Australia as a complement to what we're doing. There's certainly been no negative feedback around that. In fact, I think the market broadly has welcomed the fact that there's increased competition in that space as well. Yeah.
And on the fintech side, a couple of fund managers, Aberdeen's announced a partnership, and there's other managers that are looking at more of a robo-style solution. Is that something that Invesco's investigating or has overseas?
Yeah, we are. Certainly in the US. I think that'll take some time down here in Australia. But look, I think when I look at the Australian landscape and the evolution of the advice landscape here in Australia, I mean, you read statistics that there is something like 2.5 million non-advised Australians that will be seeking advice in the next couple of years. But then within that, you've looked at the exit from wealth from the banks post-Hayne, and you're seeing somewhat of a bifurcation of advice, i.e. you're in a good spot if you're prepared to pay a reasonable amount, you'll get everything. But then there's the lower balance investors that I think with the exit of the banks now that are trying to figure out, well, where do I source reasonable, sound, cost-effective financial advice? And I think that's where the landscape of technology and the democratisation of advice will come through is through the utilisation of technology. And longer term, that's where we see Intelliflo playing a role, is to help facilitate this democratisation of advice, particularly at the lower balance end of the advice scale.
And do you think that the advisors are actively looking for solutions to actually service that lower part of the market? Because I often question, and I don't have the answers, where's the value in it for advisors? Are they hoping that they might grow those clients into full-fledged clients in the future, or is it just around a way of maybe looking after the next generation?
Yeah, well, it's a bit of both. But I do think advisors are looking at ways to create efficiencies in their business to extend their reach. I think there's no doubt about that, because you look at the next generation, they may be low balance now, but the Gen X, Y, millennials, the next kind of affluent segment. And I think there is a realization from a lot of the advisors we've interacted with that that's a segment that they would like to have a presence in, but it needs to be one that from a business perspective makes sense to them. And that's where I think this utilisation of technology is extremely important over this next 2 to 3 years to facilitate that. And frankly, benefit both ends of the spectrum, benefiting those advice businesses that can think about ways to efficiently enter that space, and also for those Australians that are seeking advice in a cost-effective way that, like I say, may be low balance now, but that younger generation that will be the next mass affluent segment, yeah.
It's certainly a huge trend, and it's one of the biggest ones that we're seeing, and there's definitely demand from advisors. They try and understand, what does this look like over the next 5 to 10 years? What else do you think is going to have a big impact on the market moving forward? We're seeing many fund managers converting to a single unit or to an ETF or ATMF. What's next for Invesco?
Yeah, I think there's some great opportunities, Matt, looking forward that we're exploring. I think you're right, the growth of the ETF segment. We've got a big global ETF business. In fact, we're number 4 Invesco, behind the big 3, SSGA, iShares and Vanguard. So we're thinking right now about our go-to-market strategy around ETFs and bringing that into that capability into the Australian market. I think the other area we're looking very closely at and have already acted on this year with the launch of one product is the democratisation of real assets. The advice community historically being less willing to invest in that real asset space, just given the natural obstacles that existed there around things like liquidity, and how that was effectively catered to on platforms. But I think the democratisation of real assets is something that we've looked at, and like I say, we've launched a real estate fund, a direct real estate fund this year for the retail segment. So I think that's another big area, along with the growth of the ETF segment. And I think the third one is the evolution of ESG. I think there's absolutely no doubt now. I think it's, again, probably catalysed by the pandemic, but there's absolutely no doubt that investors do not want their investments contributing to climate destruction. I think there's general unity around lowering carbon intensity in investments. So I think ESG will actually facilitate more customization going forward as well, even when you think about passive portfolios that are currently just benchmarked to cap-weighted indices that have a lot of those high carbon emitters embedded within them. I think ESG will really see an evolution in the broader asset management landscape as well, which will lead to more tailoring and more customization.
And with ESG going mainstream, and I think probably becoming the norm in the next 2 to 3 years, we're seeing a trend where advisors are looking to set up ESG models. And the counter argument to that is, why not transition your existing portfolios to more of an ESG focus? Do you have any sage words on which one may or may not be better?
Yeah, it's an interesting one, Matt. I think it's going to be a journey. There's also questions around ESG really moving from just measured outcomes to responsibility as well. That ESG really, it needs to be part of your DNA rather than just, is it a material exclusion of one stock over another or one company over another. So I think the argument or the journey will move from one around what I'd call pure ESG, which I relate more to just material exclusion of those stocks, to one more around sustainability, where the thought will be more around, well, hang on, I'm not automatically going to emit high carbon emitters from my portfolio. I'm going to be a proactive asset owner, an active asset owner, and through stewardship, proxy voting, engagement, really work with those companies to lower that carbon intensity. So it's a fluid space. In some ways, ESG is quite opaque. It's hard to define leadership in ESG. I think everyone's treading their own path in terms of how they evolve that. So your question about, the moving from one dynamic to another in terms of the ESG-driven models to portfolios, I think it's going to be somewhat of a journey. It's a hard one to predict right now because I think that journey will be different for a lot of different constituents.
A lot of the things you're talking about are sounding more and more like impact. Is that a focus for Invesco as a firm to move from ESG more to having an impact and being able to measure that actual impact?
Look, I think there's an element of that certainly, and if I look at our real estate business as an example, we have been impact investors for quite some time. It's not just about ESG where we measure ourselves, and we do and rank quite well against the global real estate sustainability benchmarks, but also in our actual investments, where we've got significant exposure to areas such as affordable housing. So you're providing that social impact to correspond with a commercial, focus as well. So that's something that will increase, I think. But it's fair to say that we've already got a fairly strong legacy in impact investing across certainly our real estate franchise. Yeah.
Excellent. Marty, we're getting very close to time, but before we go, are there any good books from a management perspective or any podcasts or audio books that you're listening to or reading at the moment that the listeners would be interested in?
Yeah, Matt, I've read a really good book this year. No surprise, the work from home lockdowns given plenty of time to you get a bit of Netflix overload. So gone back to some good books, and one this year, The Fearless Organisation. It's a book written by Amy Edmondson from the Harvard Business School. That book gives a really good insight into how to create psychological safety and building a culture around psychological safety where leaders can reduce anxiety and lift performance standards by bringing purpose into being. So it's really a book that goes into fostering greater interpersonal risk-taking, acknowledging that things like input doesn't necessarily equal decision rights. but really inviting engagement, challenging norms, and reducing that anxiety, which in fact actually correlates to lifting performance standards. So it's not a long book, but it's one that I'd certainly suggest that people want to have a read. And I think it's particularly relevant to the period we've just gone through, where now, as we look to this pivot back to the new normal, thinking about how to reinvigorate the organisation, how to reduce anxiety, it's a really good read.
That sounds like a great read. I'll be adding that to my summer list. Marty, thanks so much. What you and the team of Invesco have done over the last 8.5 years really is incredible. So well done to you and the team, and keep up the great work.
Thanks, Matt. Thanks for the opportunity to be here.
Thanks for listening to this episode of Between Meetings. For more episodes and to subscribe to our series, visit the NetWealth website, iTunes, Spotify, or your favourite listening service. And if you want to contact me or engage or discuss any of the topics raised, please find me on LinkedIn or Twitter or send me a private message. We hope you can tune into the next episode.